Hey friends, this is Young with the Lee Group here at Cornerstone Real Estate. You are watching episode 11. We are finally in double digits of our real estate video blog. Thank you guys so much for tuning in. We really appreciate it. Today we are going to go over getting a mortgage. Why so much paperwork during that process? Well, let's go over that right now. As we know, the government has set new guidelines that now demand that the bank prove beyond any shadow of a doubt that you can actually pay this mortgage back. Granted, there's going to be things that come up, but like the housing debacle from before, banks have to be a lot stricter in terms of verifying that you can qualify for that loan. During the run-up in the housing market, many people were supposedly qualified for the loan, but this led to millions of Americans losing their homes because they weren't qualified. The government wants to make sure that this doesn't happen again. Number two, the banks, they don't want to be in the real estate business. And I can't really blame them. Sometimes it is a lot of work, and their focus is just on making money and providing loans for you guys. Over the last 7 years, though, the banks were forced to liquidate millions of foreclosure properties and millions of short sales as well. That was a lot of work that they are not experts in and don't want to do again. So for that reason, they want to double and sometimes even triple check that you are who you say you are and that you are qualified for that loan. Lots of people who have already closed their loans know that at the closing table, a lot of those documents are repetitive, but that's just the bank making sure that we don't have that similar housing crisis like we did previously. However, there is some good news in this situation. The housing crash mandated that there is extremely strict requirements now on the paperwork, but because of that, you are also now getting interest rates of 4% and below in some instances. Now that's a huge shift to 10 to 20 years ago when the 30-year fixed rate in the 90s was an average of 8.12 interest rate, and even in the 2000s, it was 6.29 was the average interest rate. So now you're getting a significantly lower interest rate to buy that same home. And so it is somewhat of a trade-off and well worth it. Granted, interest rates will be rising at some point in the future, so please do not miss out on this opportunity to buy homes at historically low interest rates that we probably won't see again in our lifetimes. The bottom line is, instead of focusing on all the paperwork, which we are happy to help you walk through and explain, as well as our preferred lenders and attorneys, but we should be thankful that you can still apply and get these historically low interest rates in today's housing market. If you or anyone you know is interested in finding out more about mortgages, anything in real estate, we're here to help and be as good a resource as possible. Hopefully you're watching these videos and they're informative for you. But if you do have any questions, please reach out directly to me, Young, at the Lee Group here. You can reach us on the web, www.cornerstonerealestateinc.com, or you can reach me directly, 847-496-0062. Thanks so much for watching, friends. If you guys have any topics that you're curious about, we'd be happy to address them in this video blog. Or if you have any comments or suggestions, we always appreciate those as well. Hope you have a fabulous week, and we look forward to seeing you on the next episode.